Hey team, it's Ray Campbell, Fairway Independent Mortgage. It is Friday, July 14th, and got a quick update for you before the weekend comes on interest rates and some of the things that are going on right now. We have had a pretty good week in interest rates. The bond market did what we were expecting it to do. The reports came out, the inflation numbers came out better than expected as well. We kind of expected that to happen, and interest rates got significantly better in a very short time this week. So just like last week, they move really quickly. They go one direction, they go high, they move really fast, and then they're going to come back. We made up all of that. However, remember that investors take a little bit of time to give back some of those margins that they lost when the market moves really fast. So it'll take a little bit of time for that to kind of, those margins to kind of trickle into the market, into the interest rates that we're going to see for buyers. But the good news is it doesn't cost, 1.5, 2 points or something like that to get into the sixes now. We are still, margins are a little quirky. They're tighter, which means the discount point would, in a normal market, would be a 0.25% discount in interest rate when you pay 1% discount, and the margins are tighter now, so that 1% can maybe get you a half or 5/8 or 3/4 depending on the day. So just keep that in mind when you're seeing the interest rates out there. Some of the interest rates are going to be in the mid to high sixes. If it's in the mid sixes, just let your clients know they want to double check those points and make sure that they're actually getting what they think they're getting. If they're in the high sixes, probably right on target what the market's saying. And if you are seeing something in the mid sevens or high sevens, keep in mind the credit score matters, down payment, and the loan type matters, and they're probably not paying any discount points to get there, or any kind of origination fees or things like that. And there are a few nuggets out there, so we are finding those where we can get interest rates down even below 6. But there's certain circumstances that works for. So we are looking, we are thinking outside the box. We're not going through standard loan programs. We're trying to find those ways that buyers are asking for to be able to get the lower interest rates, whether that be buy downs or different programs, that kind of a deal. So interest rates got better this week from last week. Of course, they're just kind of coming down from the high levels. And the reason for that, of course, is inflation is coming down. We did get a little bit of a surprise today with some of the bank earnings, which is a good thing. We want the banks to make a little bit more money, and that's because then they don't have to sell mortgage bonds. So if the more money they're making, they're bringing in deposits. They don't have to offset their balance sheets by selling mortgage-backed securities. And when they sell mortgage-backed securities in large numbers like that, then that causes interest rates to go up. And so the banks making a little bit more money, getting more deposits, helps us in the long run, even though the short term is kind of mixed because we did have a good run in bonds, but that plus slightly better news on the economy side for the banks is going to cause a little bit of a sell-off. So again, nothing moves in a straight line. Things are getting better, but we're going to have some days that are better than others. Today's not the best day, but overall for the week, really good. So if you guys have anything this weekend you need us, feel free to reach out to us. You can reach us on our team number at 214-441-7496. Hope you guys have a productive weekend, and we'll talk to you again next week. Bye.